there were two laggards, and they were impacted by the slowdown in rural consumption. Dabur, flat return, in fact, slightly lower, 0.2% lower for the year, and HUL too had a very modest gain of about 4%. But the big theme which drove FMCG returns was easing inflation and higher gross margins. Abneesh Roy, Executive Director at Nuvama Inst Equities, joins in on the show now. Abneesh, morning. Rima here. Thank you for joining in and Happy New Year to you. What's going to be the big story for 2024 according to you? 2023 was about improvement in gross margins driven by lower inflation, but there was rural stress. If you had to talk about the big three themes for the FMCG sector that will dominate the way the stocks and the fundamentals, what would they be?
Sure, thanks, and Happy New Year to CNBC team and all the viewers. So yes, it was a decent year for the consumer stocks, and a lot of the stocks did quite well. Some of those were back-ended. The FI inflow clearly is helping. You also talked on Dabur, HUL, those were laggards. So we do see that the outlook for the sector will continue to remain decent over the next 1 year. So what we see is 3-4 key trends which are currently a problem. When December results will come out in the next 3 weeks, you will see that the December results are still quite challenging for most companies on the volume growth. Our sense is most of the consumer stocks will see almost flattish volumes, YOY 0, 1%, 2%. The gross margins will continue to improve. So one big trend we see in CY24 is the volume growth, which is very anemic currently. In the second half of the year and even in the first half, we will see recovery there. Companies are taking a lot of action. There is a lot of government subsidies. There is a deflation also which has kicked in. So we see gradual improvement there. And even general trade in the urban India has been a big challenge. So that's one trend which is going to be positive in terms of outlook, gradual. December quarter results will be weak from a volume growth perspective. Second issue for the sector has been local players have been a key issue in detergent, biscuit, tea, etc. This is a thing which is not a long-term theme. We see companies, large companies like HUL, Tata Consumer, etc., take a lot of proactive steps, Godrej Consumer also, against the local players in these categories. So we see that the market share slight loss which has happened to the big players, that will also reverse in CY24 gradually. Also, the pricing this year in CY23 has been quite weak. So we see that also picking up. In most normal years, or if you see long-term trend, consumer stocks take 2 to 3% or 2 to 4% kind of a CAGR in terms of pricing. We see that coming back in the second half. First half still it will be a bit limited. So overall, we remain positive. Our top picks like Colgate, Nestle, ITC, Tata Consumer, etc. have done quite well. And going ahead, we see from next 1 year, Dabur, HUL also doing well. So these are not short-term ideas, but we see that because of the reasons that I mentioned and FI inflow also coming back, HUL and Dabur look good from 1 year perspective.
Okay. Got that. Abneesh, just a second there. Bajaj Auto's sales have come in. They're slightly below the estimates that we were working with. They've done about 3.26 lakh units. We're expecting about 3.5 lakh units. Month on month, obviously, it's a decline. Last month, Bajaj did about 4 lakh units. So month on month, it's a decline. Yeah, you've got the monthly comparison up as well. Year on year, a little lower than expected. We'll be speaking with the management, of course. We'll get more color on those numbers and the trends ahead for the year in a bit from now. But Abneesh, good morning and season's greetings to you. Wish you a very, very happy new year, and maybe may it be positive in every way for you and your family, and of course all your near and dear ones. I just want to go a little deeper in the point that you made, that absolutely I think 2023 is disappointed in the form of the lack of volume growth, and you're saying that will probably show up in the December numbers as well. Now, among all the companies that you cover, which are the ones that perhaps you would expect start surprising positively on the volumes front, the proactive measures that you're saying that some of these companies are doing to counter regional competition, for instance? Because at the end of the day, I mean, volumes have to come in, right? FII's flows will come and maybe that lifts stocks, but that's not a fundamental trigger. Fundamentally, A, which company may start showing some traction on volumes first, and B, I mean, if not volumes, then what else should be the fundamental trigger that could perhaps, drive an interest back in FMCG stocks this year?
Sure, it's a good question. So from a change or recovery perspective, we see United Breweries being a clear beneficiary. When I see even December quarter results, as I said, most of the consumer names will have almost flattish volumes. I think two companies would stand out. One will be United Breweries and second would be Nestle. So these companies will continue to have a good momentum. We see United Breweries delivering almost high single-digit kind of volume growth, which is a good number in the current context. And going ahead, the second theme which will excite investors will be that the pricing for the sector will come back. So if you see CY23, that has been a key disappointment. In fact, you will see in December quarter, Unilever and some of the companies will have a negative pricing. CY24, we expect in second half that will reverse. So these two will definitely excite investors. Third will be clearly in terms of raw material, no big problem. Mostly it's benign, but some companies will benefit in fact. So Tata Consumer in its tea business, HUL also in tea business will see gross margin expansion and milk prices also correcting. So you will see Nestle, you will see Jubilant Foods, etc. Their gross margins will expand in CY24 because of the benign or correction in the raw material in milk.
Okay, by the way, I've got some shots on the screen there. That is ISRO's ExpoSat aboard PSLV C58. That's the launch vehicle. And the satellite is the ExpoSat, India's first dedicated polarimetry mission. Apparently, this is, of course, a spacecraft that's going to, do a deep scientific study of black holes. So it's cutting-edge science that this mission is all about. That's ISRO in focus, doing India proud as always. Abneesh, just very quickly before we wrap out, can't end an FMCG conversation without ITC, right? 2023 continued to be very charitable for the stock, but the question is at about 450 thereabouts. Are we at the top here? And apart from, the demerger of the hotels business, but any other triggers? Would you at all look at ITC this year? Or do you think ITC has pretty much had a, has run its course over the last 24 months?
Sure. We see that ITC is a good long-term compounding story because we have seen that the government policy on taxation has been quite reasonable because the legal industry is getting back market share and ITC is the number one player there. Near-term ITC will not be among our topics because volume growth in December quarter, as I said, even for ITC will be almost flattish because they have a high base in the ITC cigarettes in the last year in same quarter. But because this time the union budget is also delayed because of elections, we'll have the real budget mostly 6 months down the line. That gives ITC a more leeway to get back market share in terms of the illegal. And definitely even in the budget after elections, we feel that the reasonable taxation policy will continue. So no big near-term triggers, but it is a compounding machine. So you will see that the hotel demerger also adds to it. But from a near-term perspective, our topics will be United Breweries, Nestle, Tata Consumer, and Godrej Consumer. These will be our topics.
Thank you. Thank you, Abneesh, for your insights into the new year for the FMCG sector. Wish you a good one. Let's now go across to Nimesh for the standout brokerage report of the day. Nimesh.
Hi, Rima.